In this video, let's take a little trip and learn how you can deduct those travel expenses. Hey there, Krystal CPA here, and in today's video, I'll be sharing everything you need to know about how you can start writing off your travel expenses. The great news is that nearly all of the expenses you incur while traveling can be written off. And you can even add in some vacation days in there as well and mix a little business with pleasure. So if this sounds a little interesting to you, please go ahead and do me a favor and like this video and let's dive in. The IRS states that travel expenses are the ordinary and necessary expenses of traveling away from home for your business, profession, or job. They go on to say that you can't deduct expenses that are lavish or extravagant or that are for personal purposes. The key here is asking yourself, are other businesses in my industry taking similar trips? This answers the ordinary question. The next question to consider is this business travel necessary? And if you can substantiate this question with a legitimate business purpose, you've satisfied this requirement. Some potential answers to the necessary requirement is the travel is necessary to improve the profits of my business, the travel is necessary to meet with a client, or the travel is necessary to scope out a new business location or investment. Next, if you satisfy the ordinary and necessary components, you need to know which expenses are deductible while you're traveling. They include air, train, bus fare, or even the car expenses between your home and business destination, transportation costs to and from the airport and your hotel, baggage fees, hotel costs, and 50% of non-entertainment related meal expenses, business communication including internet fees, fax or printer fees, any tips you pay for services related to your travel expenses, and even dry cleaning and laundry expenses if you have any. With this in mind, you should also know which expenses are not tax deductible while you're traveling. Family travel costs. It might sound like a good idea to bring your spouse or kids along with you while traveling for business, but their expenses don't qualify as a tax write-off. Obviously, whether if they came with you or not, you would always need one hotel room and that would still be 100% deductible, but their plane tickets or meals would not be deductible. Extravagant or unreasonable expenses. Always remember what is ordinary and necessary. If an expense seems unreasonably high or unnecessary, simply don't claim it on your tax return. Personal expenses. While in another city, you might do some shopping for souvenirs or clothes. These types of expenses are not considered business expenses and should not be included in your travel expenses on your tax return. Hometown expenses. Expenses in your home city are not considered travel expenses. If you decide to book a hotel room within a reasonable distance of your home, it is not a travel expense. So now you have a pretty good idea of which expenses are deductible as travel expenses and which are not. Let's take a look at how you can use the tax code to your advantage and mix a little vacation in with your business trip. First and foremost, always remember the primary purpose of the trip should be for business, and the majority of your travel days should be spent doing business work. Luckily, the days you spend traveling to and from the destination count as business days. So if you fly somewhere on Friday and leave on Wednesday, those are 2 automatic business days. Just also be sure to have another day or 2 for actual business activities, so the majority of your trip was spent doing business. Next, if you have a spouse who's also your business partner, their travel expenses could also be deductible. The same goes for any kids or friends who are partners in your business. This is where working with friends and family could actually be fun because you also get to enjoy their company while also enjoying tax-deductible travel expenses. Now, let's think about lodging for a second. Normally, you might think you would only be able to write off lodging expenses for the days you conduct business. That is generally true. But you could potentially write off lodging expenses on the days you're not conducting business too. This largely depends on how you schedule your trip and work days. If you sandwich vacation days between your work days, you could deduct 100% of your lodging expenses. For example, you might fly to California on Thursday, then have a work day on Friday, go to Disneyland on Saturday, and have another work day on Sunday. and then fly back home on Monday. It wouldn't make sense to fly back and forth for each workday, so the vacation day on Saturday would also be considered a workday. So how exactly do you claim your travel expenses on your tax return? For sole proprietors and single-member LLCs, you would take these deductions on line 24 on Schedule C of your individual income tax return and file it by April 15th. For other business entities, you would claim the deduction on your business tax return, where there would also be a line item for travel expenses. Now, I know some of you may be concerned about the IRS auditing your travel expenses. Well, first understand that for most people, less than 1% of tax returns are audited every year. So the overwhelming majority of returns are not even selected for audits. But always remember to keep good records of all of the deductions you claim, including your travel expenses. So this means holding on to your receipts, itineraries, and business notes and documents in case you need to justify your expenses to the IRS. It could be as simple as making a note on the back of a receipt, stating what the expense was for, and then scanning it into a travel folder on your phone. An IRS audit doesn't necessarily mean you are in trouble. It just means that the IRS has some additional questions and are looking for some supporting documentation. Thank you for watching this video. Comment any questions you may have below, and I'll see you in the next one.